Here's your premium post-market report for the E-mini NASDAQ 100 futures contract for September 30th, 2013. The E-mini NASDAQ 100 opened the day with early weakness, which really began after Thursday's close. You can actually see right here price closed Thursday's session on highs and basically sold off throughout the overnight session. And then, of course, at 2 a.m. here, we get the big burst of selling pressure, and that leads to a steady decline down into 32.05. We had major support down here at 31.95 to 3200. The round number has been bought up by buyers on the way up. Every test down into that level has been defended, and today was no different. We got a drop right into 32.03. That was swiftly bought up and led to a major rally back toward the 32.28 level. And basically, price just traded in a range within 31.95 to 32.40 throughout the week. That was basically the range. You can see right here, not much else other than sideways movement within a clear range. This type of compression will likely lead to major expansion in the upcoming week. So we want to be very mindful of this range, because if we get a confirmed breakout in either direction, you want to go with it because it's likely going to lead to a 3 to 5 day move in that direction. So if we look at a 60-minute chart here, you can see price a little bit better. And basically we have some very clear lines in this December contract of the NQ. Down here at the very bottom here, there's 31.56 as major support. You've got the 31.83 level as a level that was crossed and then held on a retest, and then of course everything between 95 and 3200, solid support. On the top side, you have 3240 as the key level, along with the top side of that bottom end of the resistance right there, which is 3235. So we have a little bit of a buffer on the upside, a little buffer on the downside, but eventually a breakout will likely spark that next major move. If we look at a daily chart now, and if we bring up our ADR indicator here, you can see that price is coiling up within a very tight range right here. Over the last 4 days, we have very small actual range compared to the average. That usually leads to a potential breakout opportunity. As a matter of fact, if we increase this to 5 or a 6 day range, it doesn't matter. I mean, the range has been extremely small lately. It's been 7 days, 1, 2, 3, 4, 5, 6, 7 in this tiny range. You look at the 7 day range average, and on a 7 day average, the NQ is averaging 82.5 points for a 7 day range. And right now, over the last 7 days, it's averaged almost half of that at 45.75. So that really forecasts a major breakout ahead. Now, which way is it going to break? And that's anyone's guess. But the market has been extremely bullish this year. Not much pullbacks, hardly at all. The NQ has actually been much more bullish than the ES or some of the other indexes, and it has continued to push to new highs, leading the rally here. So I would say, as the fast PMA continues to hold, we're poised to be higher. But if we take out those 32s, those 31.95s, I think we get a quick drop right back to prior support, which is going to be 31.56 to 31.50. That could be a significant area to buy for a swing basis, and maybe even heading into the end of the year. I would say 3100, 3150. If we get down into that zone, it's going to be a great buy the dip opportunity for a longer term basis. But for right now, we're going to watch this range and see how next week plays out. That's it for your premium post-market report for the E-mini NASDAQ 100. We'll see you soon.